Okay, so what's up, everyone? So we're gonna be starting to, as promised. I just want to be on time. So welcome to Forex for new traders, part one. This might be a 6-part series. I don't know when I'm gonna be posting all of them. Or I'm gonna do them live because I am doing them live and I'm making PowerPoints as I go. So, word of advice: I don't like anyone interrupting me on this live stream. I know Doug's on, so he might be interjecting us as well if needed. So for Forex, there's something that's really confusing, and I just want to mention it as well. So this would be a 6-part series, I'm thinking. Hey, Derek. So chat-wise, questions, I'm on live, so I appreciate that if you guys don't interrupt and just be respectful. So I just want to start off with a quote. Your best quote reflects your approach. It's one step for mankind and generally for whatever, blah, blah, blah. A Forex quote that I would do is from a book that I just read. So anyone that tells you Forex is easy, they're bullshit. So just read the quote. It says, "I'll let you know a secret. There's nothing easy about trading currencies. If you don't believe me, then go to Warren Buffett's office. Ask him how much he could lose almost $1 billion on the dollar, and George Soros is betting against him, and it cost him $6 million not to bet twice in 1994. They don't have. Do they have any Forex trading books? These investment guys in the Forex market. What makes it easier for anyone about it? So if you don't know, there is a paragraph in 1992 in some of these books that George Forex actually betted against the British pound. He took $1 million of his money, of his fund, and he turned it to $10 billion just by betting against the pound. What did this do? It caused a turbulence in the Bank of England. The Bank of England had to devaluate the currency, and something just happened and they blew up. So that's can happen. Like, you can blow up in Forex, and I mean the banks, they're the administrator of the Forex market. So some of these rules that I'm going to be posting in the slides from Evernow. Questions, member chat, or YouTube. No interruptions until we get to a break slide. And then Forex is not easy until you get it. And if you're rude or disrespectful in any way, I'm going to kick you and ban you. And I don't tolerate this bullshit. And so this recording is live on YouTube, and we're supposed to be starting at 2 because I want stragglers. At the same time, I realized I don't give a shit about stragglers anyways, and I'm not going to repeat like 10 times, 20 times a day. I get annoyed. Okay, so, well, I guess, we could just wait 7 more minutes for the stragglers. But then there would be like an awkward silence. Nah, I don't care. Okay, so contact info. If you want to keep updates with me, I'm on Twitter. You can also Venmo me if you think whatever I give you is helpful. There is a pay group that I am doing the Forex bot, and I know there's a few people that I keep in Aces group that I keep an update part of the members that where we're at with the Forex bot, and if you guys want to join, that's the link. These slides will be posted somewhere. I haven't decided.
If you want to talk, Jen, you can.
What's up? Okay, well, I forgot. Anyways, I think that's Doug. Okay, so these slides will be posted somewhere. I haven't figured out where I want to post them. Most likely they're going to be on OneDrive. And if you guys bitch about me posting on OneDrive, then go fuck yourself, because I really love Microsoft, and this slide was done with Microsoft and not Google Slide. Once the bot's live, I will not be in stocks anymore. That's my goal. I don't want to be in stocks because Biden's so boring. I am only going to be coming back when I see the market is dying and we have a really big correction. I'm coming back to short the market. But as of now, I'm in stocks and I'm holding long term. Okay, so what is Forex? Is Forex a scam? It is not a scam. So Forex stands for foreign exchange. It is generally referred as Forex or FX. It's over-counter market. There is no central exchange and clearinghouse where the orders are matched. There are brokers. There's dealers, market makers that are linked around the clock. It's mostly online now, so you still can do it over the phone or something. But these days, like most people will trade online with Forex broker. So I just want to make a quick comment. So I got this 2 weeks back, and someone said it's a scam. And if you say it's a scam, then you better take that back and say, call options a scam. How many times options have stole your money through a data decay? And Forex, I mean, there is no such thing as data decay. You just have to pay attention to your stop loss. That's how you get robbed.
Ready?
So what is the market size of Forex?
Ready?
I'm going to mute you, Doug. Hold on real quick. You can just interject when you want. Okay. Hold on. So, the Forex market is a lot bigger than the stock market itself. Okay, so the data I got, this is up to 2019. We don't know what last year was, but we traded about $6.6 trillion a day. Okay, we're up 5.1 trillion from 2018. So, this market's pretty huge. It's not a scam. It's not like, oh, okay, it's a shit show. It's like people's taking money. Well, if it's a shit show, then you can better call crypto a shit show and it's a scam. You better call options a scam, stocks a scam, and all these other things you have to think about. Well, what's a scam? Like, what's a scam in your terms? And the one that really surprises me the most, and I look back in other books that have this. In 2006, we traded 2 million a day, the 2 trillion a day. Okay, so we're up a lot. So to that, the growth of trading in Forex is only going to go higher from here. Most of what we trade is in U.S. dollars. The U.S. dollar is the most abundant and dominating currency out there. So, because, we have to think about the Bretton Woods conference where the dollar is the reserve currency. So you can actually take a look on this website, the statistics that are going around here. So I'll post a link in the comments and you can just take a look. So we're at 88% of all trades right now. From 2000, it's kind of near what we were in 2006, where it's 90% of all trades. So euro, or 32%, and we have the yen, probably like 17% of all trades. But most of the time, people, when they start out, they usually do the U.S. denominated currency pairs or something like that. So I wouldn't go into currency pairs yet, because this is just an intro, and I don't know how much I can cover in amount of time I have. And I do like to keep all my lectures under an hour, because I don't like to waste your time. Okay, so the next slide is just a picture. So you can actually see what's going on. All this. So this is the total all instruments. So we're at these are trillion dollars. So this is denominating that this is not 6 million. This is 6.6 trillion. So you see, like, okay, most of the stuff that we use are in euro, U.S. dollars, euro, and Japan. And these are all the other instruments that are popular. So House of Cards. Okay. You have to learn how to play their game. Okay. The house, it's like what you're playing with options. You have to know what you have in your hand. The house always has an advantage. It is the spread. The house feeds off players' greeds and aptly promotes it by offering trade signals, aggressive leverage, and fancy platforms resembling slot machines. So you have to be careful. You can have tools and stuff in military for. The house adopts their dubious risk management controls, which include complete cheating and winning off players. So most of the time when these things happen, the people who lose in Forex are the people who are over leveraged. And that has happened to me, where I blew up my account. I started from 500 and I ended up at 102, and I forgot to put stop loss because I thought, oh, okay, well, I'm going to scalp, swing 400 pips, and I'll explain pip later. So 90% of the people, I think, that I was reading from this book said, when you trade in rational markets, okay, you're having like a good time, you're winning. And then when you go to an irrational market, that is when everyone starts losing. So how do you prevent yourself from losing? Is that you have to really, really think about, okay, what type of pair you're trading and the economic data that supports it, and all these other factors that I will go over in part 2, because I realized that the whole system, like this one's kind of a little overview, but I'm going to divide it into parts, explaining every part that acts as the market in Forex, because this is something that you don't ever think about ever when you're just trading stocks, because you guys know what you're doing up against. For the most part, Forex is unregulated and free of the red tape and the volume size. I mean, the government doesn't really intervene unless something happens. So, at the end of the day, there's going to be a lot of people trading, and it's all around the world. So that was my tidbit in 2006. Okay, so who are the players? Okay, this is a centralized market. You have a buyer, you have a specialist, and a seller. So what does this look like to you in terms of what do you think? So this actually describes the stock market. Okay, this is how the stock market works. There's a buyer, there is an intermediate, and there's a seller. Okay, so the specialists are market makers. Okay, so the first example would be, you have NYC market, you have the NASDAQ market, and you have the Chicago Board Exchange. Since NYC is a centralized market, a stock can trade it on the NYC at the one bid and ask quote at all times. So, that you can get tighter spreads that way. So, the market maker tries to unify it, and they control the spread. However, when you have a decentralized market such as Forex, there are multiple market makers who all have the right to different quotes at the same time. So here is a decentralized market. Okay, it actually describes what you're looking at. So you see, like, there's so many different types of exchanges, brokers on, and whatnot. If you're a broker, right, you can actually see this when you go on TradingView and you're trying to look up a quote of, like, what is the spread between U.S. Swiss dollar or NZD, New Zealand dollar, and Japan, and you get different quotes. That is the spread that I talked about earlier, that, they can fuck you with the spread anytime they want. They can quote you anytime they want. That's why you should never, ever do when you're doing pairs. It's always good to do a limit buy. But if you're scalping the shit out of it for, like, 20 pips, go ahead. I mean, it's 20 pips, but you have to, like, understand what your leverage is. Okay, so while the foreign exchange pair is decentralized, hence it employs multiple market makers than a single specialist, participants in the Forex market are organized into a hierarchy. Those with superior credit access and volume transaction and sophisticated receipt priority in the market. On top of the food chain is the inner bank market, which is the highest trading volume per day relatively to the G7 currencies. In an interbank market, the larger banks can deal with their trade directly via interbank brokers through electronic brokering systems like the electronic brokering system EBS or Reuters. The interbank market is a credit-approved system where banks trade solely based on credit relationships they have established in order. All banks can see everyone's rates everyone is dealing at. However, the bank must provide a specific credit relationship with another bank in order to trade at what's being offered. So if we kind of look at this chart, I really want to spend a little bit more time, because this is how, I was saying, this is how Forex works. You have so many different types of brokers, and they're all interfacing with a platform, and the banks are the ones that are in control, and they're trying to control it. But it's a difference, because the banks can quote you a different price, or the broker can quote you a different price. So if you compare it to the simplistic view of what's going on. Okay, a trader wants to buy USD. What's your price? Dealer gets 1 moment, please. Okay, dealer quotes you $1.25, or euros, whatever, or I just call it points. And the trader says, okay, I buy, and then it works with the retail forex brokers. The dealer has to the dealer also has to ask the price in an interbank market. So if you're not, this is how it kind of works. They have to go back and forth with the interbank market to kind of like say, here's the price and shit. Okay, so, who are the big boys? The big boys of Forex, okay? This is in 2006, so this is all the data I have. The biggest one, that's not on the list is Morgan Stanley. So Morgan Stanley and JP Morgan, Goldman Sachs, and Merrill Lynch is part of Bank of America now, but Bank of America does a lot of Forex trading. They're one of the big boys. Deutsche Bank right now is not in the top tier of what they're doing anymore, so this is kind of old, but it's just giving you an idea who are the big boys now, because Deutsche Bank is a fucker. They fell out of the four big boys now because they don't have enough money. So, these are the list. Barclays is part of JP Morgan, so this doesn't really apply anymore, but Barclays is dead, I think. Someone has to correct me on that. Okay, so I want to give you a video on shadow banking. but we'll probably go over that later. But we'll watch it later because it's like some of. Actually, no, I'll give you the link in YouTube, and you guys have to watch it because like it is interesting what George had to say about the shadow banking system, because this is like what the inner market's like. This is like the shadow banking system, like you don't really hear about often in the media, and it's really good to understand the financial plumbing of the world, because if you understand the financial plumbing in the world, you understand how bonds work, you understand how things are connected financially. Because like someone who did, like me, I had to teach this all myself about finance. I didn't understand anything about how finances work, or how how not get fucked, and trading, and understanding all this other macro data stuff. And it really helped me a lot in trading and understanding like, okay, well, what will I do to prevent myself from losing money? But I think it's better if I send a link and y'all just look at it later. Okay, so I want to explain like the basics, like what's a pip. So a pip is a measurement of currency between a change in the currency. So if USD moves from 1.1050 to 1.1051, that is 0.0001 USD. That is one pip. A pip is usually the last decimal of the quoted price, so most pairs go out 4 decimal places, except for the yen, because they do 2 decimal places. So USD is 4 and about 4 decimal places. I know most of them are. And usually with Japanese pairs, they're like 2 decimal places, because the one, before the decimal place acts as a buffer. And they can go up and down. So yeah, that's a picture of it. Brokers, what's a good... So, I get this question a lot, and people are often really confused about brokers. They're like, who's a good broker? What's a broker I can use? What is MetaTrader a broker? I mean, it's just mind-boggling that people ask me sometimes, and yeah, I'm always willing to reply, but at a certain point I have to put my foot in the ground and establish some things. Okay, so what is a good broker? Okay, tight spreads, good leverage. I like 1 to 500 ratio. It depends on what you're using. And always practice. And then you want to have a lot of different pairs and sizes. And you want a broker that offers you new products and new leverage. Just in case, I know, I got email from Prosperity that they established a new type of crypto that you can leverage to trade. So if I pull up that email, let me just try to find it. Okay, so basically now, this one, right? They're offering, if you trade one lot, because one lot is pretty huge, basically. A one lot, you are trading 10 Bitcoins instead of 1 Bitcoin. And one lot of USB will give you 100 Ethereum, and one lot of XRP.big will give you 100K of Ripple, okay? But you always want to do leverage, take advantage of it if you have an account that can do that. But at the same time, make sure you understand the risk and have a stop loss just in case when you get stopped out. Okay, so a bad broker is that, the spreads can get really wide when there's a lot of volatility. There's not a lot of trades, not a lot to pairs to trade, and there's a high minimum deposit. And if this doesn't let you to do an extra expert advisor or a bot, sometimes you want to have a bot or something to let you trade. That's a bad broker too. So what brokers do I use? I use Hegoways, Prosperity Forex, and KTLX Forex. Those are the ones I have used before and I like them. But I am really considering switching to Prosperity because the Hughes spread got a little bit off wonky, and I really like tight spreads because I can enter at less than 12 pips. It really helps me not be concerned I'm down like at least 20 pips or something on the spread. So that's about it for part 1. If you guys have any questions, go ahead. And if you guys don't have questions because I'm done and I made it 25 minutes, I guess you could subscribe to the channel. And then I'll be posting more of these lives for Forex. So yeah, if you're late, I'm not gonna repeat. So you just have to watch the video. Okay, so I'm gonna leave it for 4 more minutes and then we're gonna stop here if there's no questions. And if there's no questions, I'm ending the stream and I achieved my goal like 30 minutes tops for a video. Okay, so I need to give you the link where y'all can just watch it on shadow banking, because this is really interesting and really important if you're trading Forex that you understand it. It's by George. Okay, so I guess no more questions. I'm going to be ending the stream now.